Just following on to what Nancy was saying there, basically what we've seen are some gains for the Democrats, but it does seem as if, given that the Democrats will likely take the House there and the Republicans are going to retain the Senate, and you've got, of course, President Trump there in the executive branch, it seems as if this is going to be more politics as usual, and that means a lot of fighting and a lot of gridlock. What does that mean for your investment strategy?
Well, I think, in one way, this is exactly what was expected. So we wouldn't expect to see much of a market reaction today. This is, kind of continue. This event is now behind us, and we can look to concentrate on the other very important factors which will be weighing on markets and economy going forward. But generally, if you look at over the next 2 years, increased gridlock could suggest more market volatility. We see more of that infighting going on. But generally, this is more a case of, as expected, and now the market can continue to focus on stuff like the Fed and what happens with trade.
Seema, one reason that investors weren't too worried about gridlock is because historically it has been kind to equity markets in particular. There is an assumption out there I've seen from strategists that if we get gridlock right now, that perhaps not too much will change on the stimulus side of things at least. But not all investors agree. I just want to play a clip here from an interview I had earlier with Stephen Gallagher over at Societe Generale.
This idea that the market's like gridlock, I think we just got to toss it out. This is a new environment. We're highly charged on a partisan basis. You're mentioning one side of it with all the investigations and the congressional powers that they have. But can you really imagine President Trump sitting still and quiet and gridlock and just accepting the fact that he can't get his wall built and other items? He has powers too. He has executive powers. He has the ability to shut down the government. I think it's going to be a pretty volatile session if we get a Democratic Congress and even one chamber with a president who wants to get things done and is not going to accept a lame duck presidency.
And Seema, I'm curious for your thoughts on this, because we do look to historical precedent many times when it comes to market performance post midterms, but in many ways, this is unlike any political climate we've seen before, unlike any president we've seen before.
No, I agree with some of those comments. Ultimately, if you are going to have more infighting, and especially with the President Trump personality there, then you are certainly likely to see bouts of probably higher market volatility than you would have in previous occasions. I think the one thing that I would point to is that, if we had maybe seen a Democratic sweep, I think at that point you could have seen more action on the trade front, because that is falling within Trump's executive powers. So if anything, this is, I would argue that there are points of market volatility, but I don't think that we have seen a situation which would cause President Trump to push further and dig his heels on some more issues.
And Seema, I know you've been writing a lot about the fiscal deficit concerns stateside as well. So I wonder if, as it regards those concerns going forward, whether gridlock is a good thing.
In some ways, absolutely, because if we had seen the Republican sweep, we would have expected another tax cut next year, which is something which, given the US debt numbers, something that they probably can ill afford once markets start to wake up to the size of the numbers that they're facing. So in some ways that is true, but again, the economy would have certainly appreciated it. We are expecting something of a slowdown in the US economy next year as a part of the trade tariffs, that roll off from corporate tax reform, rising interest rates, strong dollar. So in some ways it would have been appreciated, another tax cut. But this is just more kind of in line with what we were expecting in consensus, and we'll probably go forward exactly how we were expecting it to go.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.